Bitcoin. Bitcoin is trading around 58,000, 59, 60,000, up to 63. It is the lowest level in 21 months. Okay, think about that. And it's down about 54% from its record high back in October at 126,000. But here's the thing, the price is not the story today. The price is just the headline. The real story is hidden in a single chart that almost nobody outside a professional trading desk are looking at. And it's a chart with which side of the market you're in, right? As of right now, that chart is screaming something it is only screamed a handful of times in Bitcoin entire history. The biggest speculators on the planet are more piled into one side of the trade than they have ever been. And the firm that sit across for them, the ones we call the smart money, are more piled into the other side of where they have ever been. So two giants leaning on each other at the very edge of a cliff. When a market gets this crowded, one of the two things happens, right? Either the crowd is right and the move gets even larger, bigger, or the floor gives away. And everyone tries to run through the same door at the same time. Today, we're going to figure out which one is most likely. We are going to read the chart together, line by line in plain English. And by the end, you will understand what the heck is going on. Now, if you want this kind of analysis on Wall Street, which Wall Street, basically pays thousands of dollars, subscribe to the Black Swan channel right now and tap the bell so you can never miss an episode. And if you want to go deeper, the full scenario models, the position, the math, the weekly updates, the daily lives, join as a member. This link is in the description as usual. So let's go for it. Because to understand where the charts come from, right, we need to understand the world it lives in. And the world right now is tense. Bitcoin just closed at its worst month in years. In June, it fell more than 20%. To find a June that ugly, you have to go back to 2022, the year of the great crypto collapse, when famous funds blew up and household names went to zero. So just look at the shape. The whole story in the last 2 years is right there in front of you. The long climb, the record high at 126,000 in October of last year, and then the slide all the way down to where we sit today. That is a trip from euphoria to fear, drawn over a single falling line. And that red dashed line near the bottom, 58,000, that is a floor everyone is white knuckling right now. And the reason is not a mystery. For the last 2 years, the story of Bitcoin was a simple one. The big institutions were finally buying, right? These spot Bitcoin ETF, the fund that led a pension or wealth manager owned Bitcoin as easily as buying a stock, they were vacuuming up coins by the billions. That was the fuels. That was the rocket. Well, in June, the rocket ran out of fuel and started falling back to earth. Those names, ETF, just posted, the worst month in record, around $4.5 billion pulled out of the door. The worst single month since these funds were even born back in 2024. And here's the part that should get your attention. The biggest fund of them all, BlackRock's IBIT, is the one everybody pointed out as a proof that Wall Street was here to stay. That one fund accounted for nearly 80% of the bleeding. For the first time ever, the money that flowed into these funds over the entire year of 2026 has turned positive. All of it. Gone, and then some. The institution did not just stop buying, they start selling. This is food for thought for you. The question is, what happens next? Do we see more of this? Do we see an actual decline? Take a look at the last red bar, right? This is not panic from small investors clicking to sell on their phones. Analysts who track this closely will tell you the selling was orderly, concentrated in a handful of giant funds. That is fingerprint of institutions calmly, deliberately reducing their exposure. When the big patient money decides to step back in that kind of coordinated way, you pay attention. Now lay on top of that a fear and greed, reading down 12 out and over 100 deep, and they call it extreme fear. A price sitting right on top of $58,000 line that traders have defended all year, and a Federal Reserve that just told the world it is done cutting interest rates and might actually raise them. We will get to the Fed, but this is the table. Nervous, crowded, imbalanced, and a nice hedge. Now, you need to be careful. You need to understand that the money is driven by the institutions, you like it or not. I don't agree with it, but that's how it is. So, and how do you know what these guys are going to do? You don't. So you need to buy, you need to get in when it gets very, very, very low. 58,000 looks pretty cheap to me right now. Take a look at this chart, right? This is the one that started this whole conversation. It comes from the Commitment of Traders report. People call it the COT report, and it is one of the most powerful tools in all of finance that regular investors always never use. So let me give it to you. Here's what you're looking at, and I promise it is simpler than it seems. Every Friday, the government publishes a report that says, in the Bitcoin futures market, here's who's betting the price goes up, and here's who's betting it goes down. It sorts every big trader into groups, and this chart draws those groups as bars. Find a flat line running across the middle, that is 0. It is a great divide, and anything drawn above that line is a bet that price rises. We call it that being long. Another drawn below the line is a bet that price will fall. We call it being short. Above the line, optimism. Below the line, pessimism. It is that simple. The colors. The blue bars are the large speculators. Picture hedge funds. Big trading shops. The aggressive fast money. The yellow bars are the small speculators. Small account, the little guys. And the red bars are the commercials. And that word sounds boring, but hold on to it, because commercials are the group that matters the most. The commercials are the businesses and professional firms that sit on the other side of every trade. When the speculators want to buy, someone has to sell to them. That someone is usually the commercials. And that is why this chart looks like a mirror. Look at it. The blue bars stretch above the line. The speculators are long, betting up, and the red bars stretch below the line, almost exactly matching them. The commercials are short, betting down, or at least taking the other side. The commercial and basically one group's optimism is the other group's caution, reflecting back like a mirror image. For every winner, there's a loser. For every buyer, there is a seller. This chart just shows you their faces. Now, that green line sneaking across the top, that is open interest. All this means is that how many total bets are live in this market right now? When the green line climbs, it means more and more money is pouring into the arena, taking size, raising the stakes. A rising green line doing a big price move is like a poker table where everyone keeps pushing more chips in the middle. And here, the far right hedge, right? In the whole reason we're here today, look how tall the blue bars have gone. The speculators are more piled onto the one side, betting up than almost any other point in the entire chart. And look at how deep the red bars are plunging. The commercials are matched against them, shorter than ever been in ages. And that green line elevated, the pot is enormous. That is what is a crowded, extreme looks like. Everyone has already picked a side. Everybody has already placed their bet. And when everybody is already leaning one way, there is nobody left to push the boat further in that direction. But there are a lot of people who could suddenly want to jump on the other side. That imbalance, right there is a tension that this entire episode is built around. Now, if you only remember one thing about this chapter, remember that this card chart does not tell you when. It is not a stopwatch. It is a pressure gauge. And right now, the needle is buried in the red. It doesn't guarantee an explosion tomorrow, but it tells you the condition for one absolutely in place. Keep that image in your head. The pressure gauge buried in the red, because everything else we talk about today connects back to it. So what am I saying? I'm basically telling you that the conditions are there for some big change. It does not necessarily it's going to be bad. I've done some investments beginning of the year. My members knows exactly what I did, and I did very well. And I got out just in time, obviously. And I'm eyeballing again the low levels. I got out at 19, and it's down to 10. This particular ETF, so I'm looking to get back in. I'm feeling the time might be right. Take a look at this chart. Whenever I see an extreme like this, the first question is, what will happen, right? But that's not the question. The question is, what has this happened before, and when the market looked like this? Because Bitcoin is young, and it's not that young anymore, right? It has lived through several full cycles of boom and bust, and each one taught us a lesson. Look at this. This is every major Bitcoin bear market side by side, measured by how far the price fell from its peak. Back in 2011, Bitcoin fell 93%. 93. In 2014 and 2015, it fell almost 86%. After the famous 2017 mania, it fell 84%. And in 2022, 77%. Now look at the red bar on the right. That is us today. So far, we are down 54%. And I want you to sit with two feeling at that point, because both are true. The first feeling is sobering. If history is any guide, and turns into a full-blown bear market of the kind we've seen before, then 54% might not be the bottom. Past bears went deeper, much deeper. That is the uncomfortable truth this chart tells you, and I'm not going to hide it from you. But there is a second feeling, and it is just as true. Every single one of those gray bars represent a moment when it felt like the end of the world. Every one of them was followed by people declaring Bitcoin dead. And every single time, it eventually recovered and went on to a new high. The bears always looked terminal. They never were. So which lesson applies today? That is a $50,000 question. And honestly, nobody knows for certain, but history gives you a framework, and it tells you that pain of this magnitude is normal for this asset. That a 54% drop, as brutal as it feels, is actually mild. But Bitcoin owns violent standards. And it tells us that the people who did well were not the one who guessed the exact bottom. They were the one who prepared for a range of outcomes and kept their heads while everyone else lost theirs. This is one more piece of history worth knowing, and it connects straight back to our chart. In past cycle, the deepest bottom tended to come after the speculator finally gave up. After the crowd that was leaning long finally capitulated and flipped. Right now on our charts, they have not flipped. The blue bars are still stretched high. That crowd is still leaning long, which means if history rhymes, the great washout of the fast money may still be ahead of us, not behind. Hold that thought. It is important. So what do we do? Well, pretty simple. We are getting close to some place that is going to be a problem at some point, but we're not quite there yet. Okay. So basically, we're saying if we drop another 20%, then you should all buy. Right. At the same time, there was some concern about the fact that the Fed was going to raise rates. Do you really believe that? Do you really believe that's what's happening? That's a discussion we have with my members every day. Not so sure, because inflation is not tied to employment. Inflation is probably not tied to oil either. Maybe inflation is tied to what happened past 2 years when we lower rates, but eventually that will come through, and it will, maybe, and raising rates right now with an employment that's not that strong would be a bit of a very dangerous thing to do for the Fed to do so. But my point being is that take it easy. Take it easy. Let's see where the 50% drawdown that we have so far, right? Can we go from the top, right? Can we go to 80? The closer you get to 80, the more it's time to buy. But you may not get to 80. Why? Well, because it's being driven really by the fear about rate increases. And you may not get that. So, and some of the trades that I've done in the past are starting to look very cheap right now. Stay tuned.